Good morning. What's up, guys? How you doing? Happy Wednesday. Hope you're having a good morning here so far. Let's get down to business quick. So that flat top at 21.5. Remember, it's a range between 21.450 and 21.550, but we're kind of right there. We're opening right at it, so expect a little bit of hesitation maybe here, at least until we get maybe through 21.6. Once we get through 21.6, things change a little bit, and we can finally maybe put this flat top behind us. But it's been a couple of weeks. It's been very relevant, so we have to keep an eye on it. Again, range from 21.450 to 21.550 approximately is what that is looking like. Now, as far as news here today, really nothing while we're on stream. Trump is going to start signing, come 1 o'clock Central Time, you're going to want to be paying attention because Trump is signing executive orders at 1. And then we have FOMC meeting minutes. It's commonly referred to as the minutes here at 1 p.m. Central as well. So that's about it. I mean, Vance speaking at a Bitcoin event is really going to move the market? Probably not. So we're pretty much free and clear here to do what we want this morning. So let's get down to it. Wrongly Rightish, good morning. How we doing? Dips and Peaks, John, Keith, Taz, what's up, brother? Steven, welcome back. Gaines, good morning. How we doing? Scooby-Doo, welcome. How you doing, brother? Christian, good morning. All right, so did you guys trade yesterday afternoon? Yesterday afternoon was really an interesting, because the volatility died. I mean, the ATR yesterday afternoon was like 10, basically 9 to 12, basically all afternoon. And I traded it. I wouldn't have traded it if it was Wiki, but it was actually pretty clean. It felt like a New York morning, a calm New York morning, like session, meaning shortly after the open, but just with less volatility. It was kind of bizarre. So I did hit it. Yesterday was kind of a slow morning, but I finished up like $3,500. So it was a decent day. It was all right. Scooby-Doo, I was able to use some minis on it. Yeah, man, personal preference, obviously. I liked yesterday afternoon's movement. It was nice. It was nice for low volatility. I don't always complain when the volatility is low, only when the bars are Wiki, because then you cannot get a feel for price action. But yesterday it was fine. It was fine in the afternoon. Clinton, yeah, some good channel scalps in the afternoon. Let's see if we can get that, but with more point ranges here this morning, because obviously that is ideal. I don't prefer lower volatility, but if it's low volatility, I prefer it to be clean at least. Tony, how we doing? Good morning. All right, so you're looking at a 2-minute chart right now. This is the time frame that I take a lot of my trades off of. I will also sometimes, this is a 5-minute chart. If there's a good setup on the 5-minute, I will take it, though I'll probably still execute on the 2-minute chart pretty much every time. Honestly, it can be a little bit confusing because if you get a rollover on a 5-minute, it's not always a rollover on a 2-minute. So I probably wouldn't recommend that. If you're going to trade on multiple time frames, assuming you have like a chart trading feature, you should probably, I don't know. I'm just used to taking all mine on this screen now, but it's probably easier if you're looking at a 5-minute to trade directly off of that chart rather than trying to because again, it's not going to necessarily be a rollover on the time frame for both time frames that you're looking at every rollover. So that's the plan here today. Let's see what we can grab. Again, we'll let these institutional orders clear out. It's already been 5 minutes since the bell, so a lot of those are already cleared. I usually like to wait at least 10, and then by the time that comes around 8:40, we're pretty much clear, especially after like the 8:44 close. If there's a lot of volatility off the open, the longest I'll go before I'm waiting or before I'm considering setups is like the close of the 8:40. Well, it depends on what broker you're using, but like 8:46. Okay, whether that's the close of the 8:44 bar, however your broker represents the time. It is actually different between Thinkorswim and Ninja, which I think is ridiculous, but 8:46 is kind of like my longest cutoff. But 8:40 is also fine if there's not a lot of volatility, which there's not here today. It's actually pretty low. I mean, look at that, a 19, oh goodness. A 19 range bar. 6 minutes into the day. It's all right. It's all right. We'll make do with what we can. Terry, good morning. How you doing? Kevin, good morning. Yeah, so you see these first 3, 4 2-minute bars developing. There's a lot of wicks, right? It's a lot of battling going on, and I think it's relatively clear. And what we're looking at here is a lot of institutional volume going through that waited overnight, maybe for more liquidity off the open, or they're just executing after a morning meeting, whatever. And you have to understand that it's not necessarily for today. This could be for 3 weeks out, 3 days out. They could be building out longer term positions. So whether they're buying or selling really has very little to do with today, and that's going to lead to a lot of wicks. Especially when we're not in a trend market, where we are still in a range market, I would say. So you got to let that clear. 2.5 more minutes and we're pretty much good to go. All right, if you're just joining us here today, it is not FOMC itself, but at 1 p.m. they release the FOMC minutes. Okay, now the minutes are, here's the truth of the minutes. They're hyped in certain market environments like 2022 with the inflation story. The minutes were important. You'd have AI immediately digging through, trying to find anything in the market would move hard in one direction, and then it would oftentimes retrace at least 50%, whatever. Today, it's a little bit less, I would say, relevant, just because the inflation story is a little bit less relevant today. It's still, of course, a problem, but it's not 2022. So the minutes will probably move things for, I wouldn't say any longer than, almost certainly no longer than a half hour. But a few minutes, and it might even, the volatility might even die in 5 minutes. So we'll see. That's at 1 p.m. though, so we don't have to worry about that for a little while. All right, 1:15 out from the close of this 2 minute, and that puts us into 8:40 territory, and we are ready to rock. Old school, good morning. Josh, what's up? All right, nice push there. Good. Expand the volume. Expand the volatility. Now, is that an outsized bar, comparatively speaking? Yeah, but I would argue that compared to the average day, those first few bars were undersized bars, so we're kind of just getting back to normal here. See if we can maintain a little bit more volume. I'm sorry, a little bit better volatility. There we go. All right, 38 range on that bar, which, by the way, is not extreme. Jacob, good morning. Yeah, I mean, you look at the 5-minute chart, and I'm not a big fan of using pre-market levels to determine channels, but that's not to say that other people might not, right? They might look at that, and they do look at that. So the bears, when you get an outsized bull bar like that, now again, I want to be clear, this bull bar here, this big push happened mostly on one, now we're looking at a 2-minute bar. Okay, so back to the 5-minute now. That 2-minute bar that made up a huge chunk of this move was 38 points. It was not 200. Okay, so it's not an outsized bar compared to the average day, but today it was quite a bit larger than the undersized bars we saw off the open. So when you see this and you push that hard, that quick into anything the bears can possibly find, knowing that we're in a range market, they're gonna try to short it back. So while you might think, well, everyone is going to buy the close of that bar, right? No, because context is important. In a trend market, you'd be pretty much right about that. Almost most people would be trying to buy the close of that bar. And you'd probably see a much faster pop after the close of that bar. But in a range market, no. If you grabbed me by the neck and said, hey, on the close of that 5-minute bar, you have to take a trade, I think I would have sold and closed that bar because of the context of the situation, which I think might surprise some people. But that's the reality. You have to understand what's going on in the actual market. So now that we have tried to pull back and the bulls are taking over, right now we are back to kind of, I would say, equilibrium, and it's basically 50-50 which way we go from here. So let's let this thing pick a direction and then grab a setup. Lee, what's up, brother? How we doing? Question, you're trading on the 2-minute, but do you read the volume on 2-minute or 5-minute or other time frame? I just look at volatility. Okay, so you see at the bottom, you're looking at ATR compared to the range of each individual bar, and the ATR is based on the last 10 2-minute bars. The futures market, I think of as like the middle of the Pacific. While, yeah, you're going to have a depth chart going, or I should say a depth gauge going if you're sailing over a coral reef, small cap momentum stocks. You're going to be reading volume precisely, you're going to be watching it very carefully. In the futures market, I mean, do we really need to monitor depth in a sailboat in the middle of the Pacific, probably not too closely. And I think mental capital, where you allocate it, is extremely undervalued. It's very important, which is why you see my charts are so clean. And I get a lot of questions about, well, why don't you use this indicator? Why don't you use this? Why don't you use Bookmap? Why don't you use? Because I don't feel like I need it. It's distracting. There's a lot to look at. If you look at too many things, you end up looking at nothing. Chris, good morning. Yeah, Royale. So the difference between ATR and average day range, it depends how you set your settings. So the average day range is something I consider as well, of course. I use the average day range for 2 reasons. Okay, now this is something that I don't know if I've talked about on stream ever. First of all, if there's no catalyst in a trend market, and this is why, because we've been in a range market, let's say the average day range is 500 points. There's no catalyst, meaning there's no news. I'm watching this reversal, by the way, the reversal attempt. And the market, again, average ranges of a day is 500 points. There's no catalyst, and the market is pressing 750 points. Maybe it's time to start thinking about looking for reversals if a catalyst doesn't come into play. Now, that doesn't mean as soon as we go to 501 that you get short and pray, because momentum is stronger than any range indicator. But as you start getting 1.5x or more outside of the range of the average day on the day, you have to start to think, well, is there a catalyst that's pushing this? Or is it just momentum feeding on itself? And what happens when everyone kind of wakes up? So would it be enough to just make me go short at an arbitrary number? Not necessarily, but it might be enough to make me hold off on taking, the 17th continuation trade of the day in that case. All right, now the second way that I use the range of an average day is if we'll put it this way. I think a great goal, you're not going to hit it necessarily every day, but a wonderful goal to have, like long term as a scalper, and it's very hard to get to this point, would be to make as many points in your account scalping. Okay, I don't mean in one trade. I don't mean catching it on one swing trade. That's absurd. But this is gonna sound nuts. But if let's say the average range is 400 points of a day, if you could make 400 points that day and equal the range in the points you made in your account, that is like pristine, beautiful trading. Now, more realistically here, I hate the word realistic, but more conservatively for a goal that you can kind of make sense of right now, because I think it's important, but you should have that huge goal long term, because you can scale it monetarily. Having a dollar amount goal, I think, is silly, because what happens in 10 years when you meet that and you're only 32 and you're like, or 52, and you have decades and decades left to scale, but now you're like comfortable. I think it's more important to come up with a point per day profit goal based on something real. So a goal that I think a lot of you guys should maybe put in place as a novice, maybe intermediate, would be 10% of the day's range in points in your account. So if the average range of a day on the Nasdaq lately is 400 points, let's say, if you can make 40 points a day, that's great. I think a better goal, if you want to go next level, and this is like the real goal that I think is kind of the best place to put it, is a quarter. Okay, 400 point average range. If you can shoot for 100 points a day on average scalping, that's a great goal. Again, you're not going to hit it every day. You're going to have red days. Some days you're going to maybe blow that out of the water. But that would put you in a very top level club of scalpers that very few people are going to be there, where you can make a quarter of the day's range scalping. And it's hard. It's not easy to do. Again, that long-term goal, like if you can make the day's range scalping, you're probably one of the best scalpers. If you can do that consistently, you're one of the best scalpers in the world. And I think that, why wouldn't we shoot for that? Okay, but 25% is a wonderful goal. Even that puts you at such a top level that you would be very proud of that number if you could consistently make that amount. Okay. Here we are looking at this. Now we're pressing that. Here, look at this. Similar to what we saw earlier, right? You see that? Remember here we talked about, well, hey, if you force me to take a trade, you would think I would buy this, but no, I would short that. And now here we go, getting a big old reversal. So now it's like, well, do you short this one? And I got to hold off and see if this ends up developing into a range or trending downside. Because if it develops into a range, I can just hit it over and over again. So I'm cool being patient just to see. Because a lot of times you get this little pop, drop, fade, it turns into more of a bear trend. But other times you might get a pop or a fade, and then it pops back up and we just go sideways all day. It turns into a channel. So without that context, I can't really structure something that makes sense, at least for me. Chris, good question. So you say if we get 40 points across 10 accounts, is that a 400 point? No, I would call that 40 points per account. And I get it. It sounds crazy. It sounds insane. But that's why if you can make the range, the average day's range pretty consistently in a day, you're like one of the best scalpers on the planet. 25% is a great goal. To make 25% of the day's range. So if the average day's range lately on the Nasdaq is, let's say, like 400 points, if you can shoot for 100 points on your green days, or I suppose just on average, but maybe on your average green day, that's a wonderful goal, because that would already put you as maybe not one of the best scalpers on the planet, like top few, but you could probably call yourself one of the best scalpers in the world at that point. But why wouldn't we shoot for that, right? Someone's got to have that name. Yeah, you see this, guys? We're trying to get a reversal of time now out of the bulls. Okay, so interesting. Now, had I sold that and just blindly said, okay, we're going to enter a trend now, a bear trend, I think that would have lacked some context, which is why I had to hold off on that trade, because we saw that already happen once again today to the upside, or once already today to the upside. All right, let's see if the bulls can hold on to this. And if they can, that gives us some options. All right, ATR is currently at about 21. So again, I prefer it to be above 25, but 21 is fine if the movement can clean up a tad. Not clean up, just develop a little further. a hell of a battle going on right now. That's good. It's good. It'll give us more information. And what are we trying to determine here? Well, I mean, there's a lot of options from here. I mean, we could go sideways. We could just bounce up and go sideways in a big range, like this big range that formed early. Which, by the way, would be fine, because that would offer actually a lot of opportunities. We could take continuation inside. I wouldn't even necessarily need, if that were to occur, I wouldn't even need this. I think I'd start scalping clean bull bars above previous wicks, closing at their high, buy, scalp out quick. Vice versa. Channel scalps as we press the range. Right now, also, big possibility is a descending channel, which would be perfectly fine. A lot of options here. All right, ATR is 19.5. 42 seconds left on this 2-minute bar. All right, we just went red on the day. Nasdaq now down 0.1%. Nasdaq went red on the day, I mean. Okay, we got a bit of a wick back, but we did close below the midpoint. That's good to see. But this is developing a little descending channel, it looks like to me. Also hanging up around that break-even point on the day, which is pretty much where we're at right now. We're 0% of the day right now. Nasdaq is. Senju took that short. Cool, brother. Jacob says, how do you feel about being only a shorter if it works for me? That's fine. It's fine if you can't wrap your head around getting long. I mean, I think that's fine. You know, Jacob, the reality is most of the time when I hear that people only buy or only go short, mostly it's in smaller cap stocks where the catalyst that they're riding is very one-sided. So you'll see people that specialize in shorting these big pops. You'll see people that specialize in scalping the long side, like buy high, sell higher mentality on these stocks. And then the catalyst dies and those people leave and the shorts step in. And that's all they do. They short those big pops. With futures, I think it makes a little bit less sense just because the price action, I mean, the psychology, it's a little bit different short to long. But the price action, the setups are more or less the same with slightly varying degrees of, I'd say psychological differences. But you know what? If you're like, all I want to do is short, I don't want to go long, fine. Fine, whatever makes money. All right, so it looks like we're developing a little descending channel here. Really only 2 touch points. All right, good. Further developing this little channel. So if we can get a harder push, what I don't want to happen is we hang out in here and then we make a test, because then you have the very legitimate argument that that's just a wedge breakout if we form a little wedge and then push. And then I think bulls would step in and buy that and break what I'm looking at. So if we can get a push downside here, we wouldn't necessarily have to break through there, but it would be ideal. But I'm looking at the very clear, I'd be looking to fade that little upside test on the third try. Jacob, about only being a shorter. It's more of a matter, maybe I'm just wired so, easier to read charts and understand when shorting action is about to take place, but I feel bad because I know Nasdaq rises in the long term. Yeah. Okay, so Jacob, I ran a poll recently on the channel here in the posts section, and I said, hey, for the rest of your life, if you could only trade intraday to the long side or the short side, what would you pick? And long won by a mile. And I was a little surprised by that. And everyone said, well, not everyone, but there were a few people that were like, well, obviously you look at the long-term chart to the long side. And I was like, okay, well, interesting. Because there is a legitimate argument there, obviously. There's a bias. But does that bias get kind of, I'd say, equally weighted out by the bias of stairs up, elevator down? People tend to freak out, panic sell, and panic buying, FOMO, is less powerful than panic selling. And that takes place intraday. Whereas the bias to the long side intraday is pretty much as small as you can get because it carries out over a long time period. So I was kind of surprised that it was so heavily weighted to the long side. So if you wanted to only short intraday, I have nothing wrong with that at all. Tom, what's the saying? Shorts sound smart, longs make money. I don't think I've ever heard that. Yeah. If we're talking long term, yeah. But nah, there's a lot of people that focus solely on, again, for example, shorting like small cap pops. They just pay to locate the shares. They borrow them, they short them. Kind of a dangerous game, I'd say, but if you're managing risk properly, it can be done. I think it's a little bit harder to find edge because you have to pay to locate. So you're kind of starting in the red each position, but it can be done. All right, ATR is back above 20, so it's actually not fallen off a cliff. It was at 19.5, maybe 5 or 10 minutes ago. So it's kind of holding steady at 20, which is decent to see. Goodness, I don't like these wicks. These are brutal here. Brian, anyone know where support is for Meta? I'd love to know, brother. Anytime I've ever had to deal with customer support at Meta, it has been just about the worst experience I've ever had. It's always baffled me. I mean, you would think that these big blue chip companies could just fill warehouses with good support reps. But it seems like they have like 8 sitting in a room who just don't care. Oh, wait. Wait, Brian, you're asking about a technical analysis support level for the stock Meta. You can see if this lives in my head. Gaines, could you say that one could use your strategy with higher time frames? Like the 5-minute and 15-minute, like you use the 2 and 5 minute. Yeah, listen, Gaines, all you guys, not just Gaines, though he's a cool guy, all you guys, take off the time frame of any chart, take off the prices. It's all the same. I don't care if you're looking at a weekly chart or a 15-second chart. It doesn't matter. It just doesn't matter. There's no magic to the time frame. The only reason you pick the time frame you pick is to get a balance of quantity of setups and quality of setups. And then there's like a third aspect to that, which is how fast can you keep up with the chart all day? Can you really make good decisions on a 15-second chart for 6.5 hours? Probably not. Probably not. You might think you can, but you might get an hour in and be like, oh God, I would probably make more money if I just slowed down and went to a 2-minute or a 5-minute. It's all the same, man. It all works the same on any chart. Price action doesn't change. And yes, it is that extreme. It's going to be the same on a 15-second if you remove the context. It's going to be the same on a weekly. It doesn't matter. Yeah, Josh, how about choosing time frame based on what you're willing to risk? Okay, I think you should. Let's put it this way. You shouldn't risk so little because you don't want to lose money that you get chopped up and you're not risking enough where the trade is structured the way that it should be. But yes, what you're saying, Josh, makes sense. If you're on a weekly chart and you're trading 1 micro, but the amount of points that you have to risk to put your stop put your stop in a place that makes sense is going to be a lot more than if you're trading a 1 minute. So yeah, Josh, that also comes into play. But when I say that, what I really don't want you guys to do, because I don't think it's going to work, is I don't want you to run to a 15-second and then start risking 2 ticks on the Nasdaq. You're going to get chopped. Mario, good morning, brother. How you doing? All right, we've got 1 minute and 5 seconds left on this 2-minute bar. We kind of just broke out of that flat bottom a little bit, at least tried to. So I think I could actually structure something that makes sense here. If we got a decent close here out of this bar, which the bulls are now trying to wake back up. So this is kind of what I'm looking at, though. You know, you have to consider that we have a little bit of a wedge going on. You could draw this a couple different ways. But I'm looking at that because the market is pretty much break even right now, and the bears are kind of trying to keep this Nasdaq red. So just trying to see if we can structure something that makes some sense for the risk that would be put on. $23 seconds left on this 2-minute bar. Let's see how this thing closes. Yeah, you're going to get the rollover right on top of that little descending resistance that everyone can see. That oftentimes gives the bulls a little bit of confidence, even if it's just temporary. See this here. At about 5 points, the bears took it lower. Yeah, Cindy, it's pretty early here to be seeing this many wicks. You know what's going on? We've talked about this a lot. The break-even point on the Nasdaq. It's just been, when there's not enough volatility on its own, the break-even point just acts like a magnet. It just gets stuck. You get the bulls and the bears arguing around it, and it can last quite a long time. I really like when it just breaks and goes and gets away from there, just because it's a pain. And this is what happens when you get stuck around it. But it doesn't last all day. It always breaks at some point. Yeah, the 5 minute, you can see it's pretty damn clean. Yeah, I mean, man, when you look at this, it's always kind of tempting. I mean, that's just the brutal truth. It's kind of tempting to put something on in this, because you see this and it's like, well, you know, I could probably pick up 15 points with relative ease, but the problem here is to structure it that makes sense. I'd probably put my stop above here by at least a point, so I'm not in a skunk zone. The problem is you have this brutal wedge that's forming. I mean, the bottom's not open. We're stuck at the break-even point on the day, and there's a brutal wedge. And that's causing all these wicks. And, you know, what are we looking for? We're looking for probability. Willie, good morning. How you doing, brother? There we go. About time. About damn time. Okay, we've now kind of... The bottom has fallen out as far as that flat bottom. Let's see if the bears can hold on. There we go. Beautiful. Getting a nice close. All right, now, listen, we're just talking about probabilities here, okay? So, and nothing I say is ever going to be 100%, but it doesn't need to be. It only needs to be like 60, 55. We're in a range market. Is this just going to break and head way lower instantly? 10 consecutive bear bars? That would surprise me. I do think we're probably going to see a retest of this. And I would like to short that. Fade it. Put the stop above that wick up higher, which may be tightening in compared to the 40 of normally. All right, ATR is currently still at about 20 and a half. It's at 20.6 right now. All right, here comes the rollover. Oh, bulls, slow it down. We got to roll over just ahead of that little trend line. All right, limit order out to get short here. No fill quite yet. Limit order's at 73. I'll let that sit for a little bit here. See if I can get a fill. Nothing yet. And then, if I could get a fill here, I'd suck my stop, and I think I'd place it actually a full point. I don't like to go a single tick on NQ. A single tick might make sense for ES, but when you look at NQ versus ES, volatility on NQ is going to be, based on my calculation, like 3.75x ES. So if, one tick makes sense on ES, then a lot of times a full point makes sense on NQ. So do what you can to avoid some skunks. All right, I canceled the limit because we just got the rollover of the 2-minute bar. And I wouldn't have gotten a fill anyway. So let's adjust this and kind of reset our thought process here. I draw like that still, to be honest with you. Yeah, I missed our fill by like a couple of ticks. That's all right. Keep watching here. All right, the Nasdaq is now down over 0.1%, which is big. We've been stuck around that break-even point all day. Obviously being a little sarcastic. You know, believe it or not, ATR is actually creeping up a little. We're now at 21.59, which is good. The last thing we need is for ATR to die with this choppiness going on. Again, yesterday afternoon was a weird afternoon. It was, ATR was low. It was like 10, 9 I saw some cases, but the movement wasn't really all that wicky. It was actually relatively clean. Get this wedge breaking. roll over kind of right on top of that wedge. There's multiple ways to draw that thing, so. There we go. There we go. Come on, Bears. We need someone to show us some backbone here. Let's see if the Bears can be the one. All right, let's clean up as we go. I'm gonna leave this, we'll just extend it. Well, I mean, even though it really is wiki today, isn't it? I mean, ATR is holding up. It's at about 20. Bumple, are you looking to short off this resistance line? I'd like to. For me, that's a structured trade that makes sense. I'd suck up my risk. It would not be 40 points. I'd suck it up to a place that makes sense. We then have a flat bottom, and if we break through there, I can probably place a limit order to buy it back with maybe 5 or 10 points of stop hunting rocket fuel in addition to what I'd already have. But we need to see a test. Very indecisive here today out of the bulls and the bears. I mean, market's down 0.13%. It's still kind of around that break-even point. We've The bulls have somewhat accepted going red on the day. I mean, look at that 5-minute chart. This thing is just... It's so structured, but it's so wiki. Yeah, listen, remember, if you are just joining us, 1 o'clock, you're going to want to keep your head up. Trump is signing some executive orders at 1 Central Time. And also at 1 Central Time, we get the FOMC meeting minutes. It's not the meeting itself, just the minutes from the last meeting, which is essentially, you know, the minutes, what it basically is a transcript of what was said that maybe didn't get released on the day. It's a big deal when the FOMC meetings are a big deal, like 2022 inflation story. Right now, it's a big deal, but it's not, I don't anticipate it's going to move things for 2 hours. You know, maybe 10 minutes and then we're kind of past it. All right, relatively strong bull bar. Right now, I don't have a lot of reason to trust that. Market hasn't given us much reason to do so. So nearing a test of that resistance area. Not quite there yet. All right, now we'll grab a short there. So here, let me show you guys how I'm going to structure this. I'm going to suck my risk in, and we'll go a point. We'll go 88.75. We'll go a point above that clear area. Try to avoid getting skunked too bad. And I'll leave my my limit buyback order down here for now. Though I do intend to likely suck that up and put it 5 points past the low of day. Like lower than the low of day. Try to take advantage of some of those stops as they get taken out as we create a new low. All right, getting a little bit of a pullback here. Now again, that stop down there, that's 5 points approximately below the low of day. What I'm really looking for is to use that low of day stops, or those low of day stops, as again a little bit of fuel, push me. Ideally at least 5 points to fill me. If it ends up being a little bit of a less of an extreme breakthrough if we get the test to begin with, then I may manage manually, but let's see. All right. Well, we need to see those bears try to take out these stops here, because you know there's stops down here. There's not going to be a ton though, so I'm making an ask of 5 points on the break through those stops, which, I mean, the last break we saw 5 points almost exactly. So I need to watch that break manually if we get it to begin with, and then see if we can get a bit of a fill. Let's see if we can get filled, I guess. All right, here comes the test. Now, this earlier descending resistance, we know it's there. but I like to clean up my charts, even if it seems premature. Let's clean it up. The trade's on. We know where it's at. I'll just let it work. And just need to see a break of that low. Take out some stops. Give us at least 5 points of a push through the stop area. Again, you see the structure here of this 5-minute chart, top left. So many wicks. What's up, Simple? How you doing? Oh, bulls are trying to hold that little higher high. Again, in a big overarching descending little range like this. To me, I wouldn't say that means too much. Again, our stop is, our management is pretty much where the setup goes out the window. I give it a little bit, like a point or two extra to avoid getting skunked to the best of my ability. But the risk is managed, so it's a matter of letting the thing try to work itself out. But again, I really want to see at least an attempt. Even if it doesn't hit us out necessarily immediately, I really want to see an attempt of a break of this low, because I know that the more bars we spend after this curl, the more stops are going to accumulate down here, which increases the probability of getting me 5 points to fill me if we see a break down here, because the more orders you have, the harder push you get. In one spot, that is, right? Becomes more of a one-sided market for a split second. So let's see if we can get a test of a break of that downside low, and then maybe enough liquidity to hit us out. It looks like maybe we're going to get a test here. Let's see. Come on, Bears, take out that little low. The Bulls are trying to hang on, but these Bears are trying, man. What I don't want here is to form a continue to form a little flat bottom, or a wedge, I guess you could call it as well. I mean, I'm more concerned about that, about our next trades. ATR is at 18, you can see. Yeah, a little over 18. It's holding on, but man, it's not 32. You know, this time of day. The thing came down pretty quick this morning. Again, that's volatility, right? John, do you move your stops to break even? Depends on what strategy I'm trading. But no, generally speaking, I'm not a fan of moving to break even a lot. Sometimes it makes sense mathematically to move to break even. Most of the time it doesn't. Most of the time it is a psychological protector. There's nothing wrong with doing so, by the way, if you feel like you need to protect your psychology. I just don't feel the need to. And I know the math. The math doesn't get better because you move to break even in most cases. Now, again, there are some situations where, like, you take a starter on a trend day with one contract, you scale into 25 contracts as it goes in your favor, and you move to break even each time. You take a ton of break even losses. You take some losses on your one contract position. And then every once in a while, you have a huge home run. That makes sense. On a typical trade, I don't know, everyone's on this like move to break even kick. I honestly, guys, I think it's because they don't want to take losses on live. I think that's why. Because it doesn't improve the math. It just protects your psychology a little bit. But even that, it might make your psychology worse because moving to break even, you get skunk stopped on break even a bunch of times. And if that makes your psychology tilt because you get frustrated, well then it's probably, you probably shouldn't do that, right? I'll show you this look. Let's see if we can get a break. Bears are struggling, man. All right, so we have a little potential of a flat bottom starting to form here at around 37-ish. For now, I have to stay stubborn. I want to see my 33 low of day break. Take out some stops, push me to maybe at least 28, give me a fill. Now, obviously, if that 37 flat bottom ends up holding, it's not going to be great for us, but I don't care. That's fine. Right now, it's worth it for me to hold out to see if we can break that. Volatility's low, though, man. Starting to get a little bit lower here. ATR is creeping into the teens. Only at about 18. Here we go. Do we get a test and a break? We're on the 37 little flat bottom. It's actually fine, because if we can break that flat bottom, that might push us to a break of 33, which would then trigger stops. Kind of a chain reaction. Well, there's an attempted push through the 37 flat bottom. Come on, Bears, give us a break of 33. There we go. All right, out there, you guys see that? You see what I mean? You break that flat bottom, gives you a little liquidity. Then you break this flat bottom, a bunch of stops, push you way down to 26. My take profit was at 28. You see what I mean? That's why stop hunting is, I think, one of the easiest ways to incorporate it into an existing strategy. And I think it does improve. I mean, it does. It improves your edge if you implement it properly and you think about it the right way. Because it's like free rocket fuel. Okay, and it doesn't, if you think about it the right way, it doesn't apply to the stop side of your trade. It applies to the take profit side. Now you have to make the break, which sometimes it'll hold and reverse on you, that's fine. But if you make the break, a lot of times if it's been there long enough and it's an obvious enough stop level, you'll get a free 5-10 points of rocket fuel, like we just saw. So that puts us out there. Again, smaller scalp, pulled in the take profit, pulled in the stop. So that's where we sit currently on the day. One trade just so far. Let's see what else we can grab here. I'm going to keep a scalping mentality. Okay, so I'm not really taking big swings. I don't think today's a day that makes sense to do that. So, let's see what else we can get here. Scooby, I think I've seen one of your videos on it, but do you make videos on selling calls, puts? I've made quite a few videos on this. Let me think. There's one that's titled, like, I think it's a few years old now. It's titled, like, this paid my bills when I was broke or something. Because it did. That was the first trading strategy that let me go full-time. For my now wife and I, to cover everything we needed, was taking net short positions in options. I should say net sell, because net short implies I only went downside. No, net sell positions in options. All right, we got 23 seconds left on this 2-minute bar. These single big bar pushes, I'm not huge on. From the lows, you get a single big bull bar that pushes you higher into the retest, the resistance. Because what can happen is, here, look. What can happen is you get a rollover. If it closes up here, you get a rollover, and now it's on top of many people's trend lines. Like you see, we roll over and we're really pressing into it. Sometimes this can be enough to finally get the breakout. So if we're going to see retests, I prefer to see it, 2 bars. Not necessarily single bars. There's some cases where a single bar might make sense. Again, there's really no blanket statements in trading. It's a very nuanced thing. But it gets easier the more bars you watch, the more days you watch. If you guys haven't yet, I don't think I've said anything all stream. Please press the like on the stream. It helps out tremendously. Really, you have no idea. All right, now remember, 1 p.m. We don't have to think about this quite yet, but 1 p.m. you're going to want to keep your head on a swivel. Trump is signing executive orders, and we get the minutes. Trading Chris, good morning. What's up, brother? How we doing? I mean, you guys see that? It's this is one of those things that, like, I hate to say it because it sounds, I don't know. But this is one of those things where the more days you watch, you start to pick up on these things, and all of a sudden you think, well, what would give the bulls the confidence to try to break this thing out right now? Well, a big bull bar closing right near the trend line, a rollover on top of the trend line. Maybe that's enough. And here you go, the bulls have some confidence. They're feeling good. Let's see if they can hold it, which is the next big question. All right, now, by the way, this is the first test in almost 90 minutes. Wow, 75 minutes of the 5-minute 20 EMA. Okay, so watch that. It's not enough to, like, just get short in front of it, but I am paying attention to that. See if the bulls can just take it through. Also worth mentioning, the market is now minus 0.07%. So we're getting kind of back close to that break-even point, which was a pain the first time we dealt with it today. All right, well, I'm going to grab some coffee, guys, while this works itself out. I will be back in a couple of minutes. Don't go anywhere. right, we're back, baby. And not a lot has changed other than that one big bull bar that we saw. Tried to push it up, the bulls did. And of course, we're in a range market, so the bears slapped it back down. Now, I mean, if you take a look here, this is basically a retest of that trend line, which I'm actually going to go ahead and delete, just clean everything up, and we can start fresh now that things have adjusted a little bit. ATR is at 15.8, which, you know, for 10-15 is not great, but it could be worse, right? It could be 6. So we'll take what we can get. See what kind of setups can develop here. Again, right now I'm just thinking scalping mentality. I know someone's gonna ask about stops and reward. It's gonna be a case-by-case basis. I have to do what makes sense. So as far as running like 40-40, it's not gonna be that. It's gonna default to 40-40 and then I'll adjust. Again, top left of your screen is a 5-minute chart, top right is a 2-minute. As far as setups are concerned, I'm watching the 5-minute for structure, but the 2-minute is really my main focus right now. The 5-minute is starting to clean up a little bit, but those wicks previously, I mean, there's not much you can do with that. At least not much I can do with that aside from, you know, you zoom in on a tighter time frame like the 2-minute and maybe take a channel scalp here or there. It would have been nice to grab a little bit more than one, but we really only got one that was worth taking, at least for me. Oh, by the way, I'm going to be hitting this again later here today. This ends in like 12 hours. Okay, Apex 90% off, and you can pass in a single day. I get a lot of questions about like single day pass. No, you do not have to pass it in one day. Single day pass, what it means is you can take as long as you want. Remember, it's a monthly fee though. Ideally, you wouldn't take longer than 1 month on an eval. Single day pass just means you can pass. For argument's sake, let me just be very clear. You can pass in 5 seconds if you want. You can pass the test in 1 day, 5 seconds, 3 weeks. It's all fair game at Apex. Right now it's 90% off if you use code BIG. You have to use that to get both of those, obviously. John says, okay, went short at 460, going with that trendline break. Probably do the opposite of that. Well, John, I hope that works out for you. Honestly, if we can get a nice hard downside break, that would be pretty much best case scenario, just because we'd get away from that break-even point on the day. Not to mention, volatility would likely increase. ATR currently is 15.2. Seeing that increase would be nice. Yeah, this is a good conversation here. Chris says, this would be a long for me if it were the London session. Funny how different strategies are. Yeah, you know, listen, a lot of people, I don't think about it this way. And I think you should think about it this way. Most candles, especially in the first half of the day, most candles, you could do opposite things and both make money. How is that possible, right? Only one can make money. Time frame, right? In the futures market, they're so efficiently priced that it's very, very common. Like, the probability is like 80 to 90% that you could buy or sell at the same point shortly after the open, and you will see that price again. You will be at least one tick in the green at some point during the day, later in the day. Okay, now 80 to 90% is not 100, so that doesn't mean you should just risk 100 points to make 5. The math isn't going to work. But I think that's good to know because the time frame changes everything. For example, John, you could be short here at 460 looking for, I don't know, maybe a 2-hour swing trade. And Chris could get long here at 460 looking for a 3-minute scalp, and you could both make a bunch of money. There's not really right or wrong. There's your trade, and that's the only factor, really. Now, trend days, that changes a little bit. Because trend days, it's not uncommon to see, you know, you get a price, let's say 9 a.m. and you never see it again because the market just pulls away. But trend days are only going to happen maybe 10, 15% of days. We haven't seen a trend market in a couple months. We've had little trends here and there inside of a range market, which has been helpful, obviously. But it's been a while since we've seen a true trend market. You could draw it like this. You know, arguably this would probably be the better way to draw it like that. ATR currently is at 15. Okay, now let me just walk you guys through my thought process here. Do I think with a high probability that we're curling upside right now to just crank into a bull trend? It would surprise me. If it came, I'd welcome it with open arms. But that would surprise me. So I was looking at this bar and I was thinking, maybe I should buy the rollover. And I stopped myself because I know we're in a range market. And this, to me, right now, the probability to me, I would bet, is much higher that we're going to see this turn into maybe a little ascending channel. We need to see a third test here to really know for sure. I mean, we've arguably had already 3 tests, but another test. So instead of, entering with a stop order, like I would in a trend, in more of a trend move, not necessarily a trend market, but more of a trend move, I'm more interested in getting in a limit order, which is going to require a bit of a pullback for me to do so. So a retest here is really what I'm looking at right now. Now, as far as that 20 EMA on the 5-minute top left, it's been tested enough times now where I'm kind of ignoring it, to be honest with you. If it were the first test in the last hour or so, I couldn't really ignore that. But right now, I don't care too much about that. Here comes the rollover of that 2-minute. That's fine. Good. All right, I'll grab a little long there on the retest of that channel. I will suck my risk up. I'm going to put it at, right now I'll put it at 425 for my stop. Okay, and then I'll leave. That's where we currently sit. And once I'm in the trade, I like to just get rid of these. So I'm going to leave this up here, but I don't imagine I'll leave it. I imagine I'll be taking this off early with a scalping mentality. So that's not early, by the way. It's just part of the plan. But I leave my limit high. Why? Because it's tariff time in the market. And if we get a headline, I want to capture that to the upside since the stop is where it is. I might as well, since I have my finger on the trigger, I might as well leave the limit order, at my 40 points and capture it. I can always just use a hotkey to get out. Right, so. Let's see if the bulls can give us a little bit of a better push. A little bit closer to this high. Then a little in the green, pretty much, yeah, a point or two in the green right now. Get ready here in case we see a pop up through 470-ish. A little closer to that previous wick. I didn't get it yet. The bear is kind of trying to expand their territory to the downside in this channel here. You can see the bulls trying to buy that little support top right of your screen, the 2-minute. Well, I guess you can see it on the 5-minute top left as well. Clearly, bulls trying to hold this little ascending channel. And it makes sense. They're kind of trying to figure out where that third touch point should be or if it's going to hold. Back to a little green on the trade. Break even. Perfect score. What's up, brother? How you doing? All right, so you look at the 5-minute top left. I mean, you could draw this a variety of ways. Bears are kind of trying to break through that and turn this into a little bit of a leg up and then a fade. But we still have that level that I'm trading off of. All right, I'm gonna suck my stop up to 36 and a quarter. I'm not only risking like half an hour on this trade. Again, just managing on the fly. But I do have a live order out at 36.25. I mean, you can see here. Right, if we break this low, I want to give it a point of room because I don't necessarily want to get skunked on 1 or 2 ticks. Obviously, maybe 1 tick makes sense on the ES. On the Nasdaq, I prefer to give it a point. But if we break this low, this wick here, my idea is pretty much out the window. So I don't want to give it to this low. If I were swinging this position, I would give it to at least this low. But this is more of a scout mentality, so I'll adjust that up. Bring it up to half an hour. Well, back to green on the trade here. I really don't need much here. I'm looking for 15, 20 points. Yeah, about that. All right, now we're starting to see there's multiple arguments here right now, and it's going to cause some confusion, I think, out of the market. You could argue if you zoom in that there's a little new descending channel. If you zoom out, there's clearly an ascending channel. Right now, I think that's where the confusion's setting in with traders. Back and forth around my break-even point. My risk on this trade is tight. It's half an R. But let's just see if we can get a push up toward up through, I'd say 470. And then I'd pop out. Look for something else. Ryan says, how many monitors do you have? Well, in front of me, I have 4. One of them is a regular. 3 of them are widescreen curved. So I have a lot of screen real estate. You don't need that much at all. But it's nice. I like to be able to see things. Yeah, Frank, it's all on one video card. Yeah, if we see this guy fade, I'd cut this at about 36. Trade idea. Listen, once you have a pretty good understanding that your idea is no longer valid, get rid of it. At least if you're scalping. I mean, if you're swing trading as well, but with swings, you give more room. With scalping, for me, once we break this low here, the idea is pretty much dead. I mean, you could hold until this low and hope, but I'm not into that. So I'm risking half an R on this trade. Seeing if we can get a push up toward, again, through 470. And I'd probably pop out with a hotkey. Well, ATR has now dipped below 12. It's at 11.99. So, that, I mean, I'm fine with that for now. Below 12, I start thinking twice about new entries if the price action isn't clean. But in a trade, if we saw a substantial dip below 10, I'd have to think about early management. But at 12, I'm fine, considering I'm only risking half an R and I really don't need that many points. Jason, do you not look at ES with NQ? Mental capital. It's behind me. I glance at it, yeah. But you could say, well, you should have ES up, and then you should say, wow, you really should watch Bitcoin. It's like, you could watch everything. I just clean. I watch one product. I keep my charts stupid, simple, clean, and I trade the price action. ES and NQ are too close. They move too similarly for me to divert my attention, in my opinion. Now, if you watch ES and it helps you trade NQ, then watch ES. But does it actually help? Or do you just think it helps because someone told you to do it? For me, I don't find that it helps. It just is distracting. You guys, I've shown the position about 100 times. Look, right there. Let's see if we can get a pop through 470. Yeah, I mean, you guys can see here the bears. I mean, clearly when you look at the 5, these bears are trying to make this argument for this new little descending channel. When you look at the big picture, I can't really see it on this look, honestly. When you look at the big picture, yeah, here. We're still in that ascending channel, though we're now starting to form a tighter time frame wedge. Okay, so if we can see just a pop up through 470, take out this wick high, that'd be enough. And I think I'd hit out with a hotkey with a limit order on the offer. But ATR is still a little bit low. ATR is at about 12. Okay, Frank, newish here. Could you explain the 3 different graphs you're showing? Yeah, I gotta get labels on these, huh? Fair question. Top left is a 5-minute. Top right is a 2-minute. Bottom is the daily, showing the New York session. Oh, and this is a 2-minute. Yeah, so top left, we're kind of watching that 20 EMA on the 5. There you go, there's some bears stepping in. Okay, now I'd cut this guy about 10 more points downside. At 36.25, I'd cut him. But the bears are going to have to earn that. In a range market like this, you got to earn your breakouts. Well, ATR is still holding just below 12. It's about 11.9. So let's see if the bears can just cut us out here. Again, I'm only risking half an R on this trade. Here's the look. So break down through 36. There we go. It's about time. So we'll get stopped there on that trade. Okay, so we're still green. Like we gave back. Oh, let me think. We gave back maybe 1,500 bucks off the top on that trade. So, I mean, we're green a little bit. We're green like 700 bucks, which I would call basically break even. So let's see what else we can grab here. Again, still scalping mentality. Raul, what's a good strategy to use? To help with finding patience when the market isn't giving you the ideal setup you want. Raul, I wish there was a strategy, man, that I could sit here and say, you do this, and then it fixes patience problems. The real thing is you understand your data, and then you think, okay, are you here to gamble and have a good time and lose money slowly but surely, or are you here to try to provide? That's the question. If you're here to have a good time, then take trades when you're bored. But I mean, I got like, let's just be straight up, guys. Got to be honest. If you're sitting in your office or sitting at your computer, and your goal is to provide, whether it's for you and a spouse, a family, and you sit here and you're like, wow, I'm really bored. Let me take a trade. You should feel awful about that because you're letting all of them down. Now, if you do your job and you perform well and you're red, you should feel good about that. Yes, you didn't make money, fine, but you executed the process the way that's the correct way to do this so that you can provide longer term. So as far as you look at the 5 minute, you have a little bit of a kind of a collapsing wedge here. You can make that argument. So we got to see which way this is going to break. Chris, I think I've had fun trading maybe 5 times in the past 3 years. Listen, trading, I really don't want to like come off as the guy that's like, you should not be having fun. If you're having fun, you're doing something wrong. You should enjoy what you're doing. You should have fun trading. Now, when I say fun, I don't mean like dopamine hits. You leave psychologically exhausted like you just, gambled for 12 hours at the casino. That's not what I mean. That's not the kind of fun you should be having. You should be having, quote unquote, fun, sitting in a room with the door closed. You have music on in the background. You're listening to a podcast quietly, and you're watching the charts and you're thinking. If you don't like to sit in a room and think, I don't know if trading is going to be like a great multi-decade long career for you. But if you're like, you know what? I like being by myself in a room, and I get it. Like hanging out like on a stream like this is good for. It is good so that it doesn't turn into like a weird, lonely existence. But sitting and thinking and trying to piece together this puzzle all day, if you don't enjoy that, I don't know if this is for you. And I don't mean that as like you don't deserve to be a trader. No. It's like I don't think you would like being a trader, because that's what this is. Some people love this. I love this. Some people rather, who knows. All right, so I'd still call this a range, man. James says, I average 70 to 80 bucks a day trading one micro. I average 100% loan accounts trading one NQ. Scale horizontally, sit on my hands, all learned from Mr. Reg. Yes. Scale it horizontally. Yeah, I get it. The expenses are a little higher when you scale horizontally. I understand that because you need more accounts, but the probability of getting a payout goes way up, especially if you have edge. It goes way, way, way up. So I get it, having, 10, 15, 20 accounts is more expensive. It's not as attractive, but I'm telling you, your probability of getting a payout, which is the whole point, and getting consistent payouts skyrockets because you can actually take real drawdown, which is part of this game here, man. And conveniently enough, this ends in like 11 hours, 90% off, and you can pass in 1 day. Use code BIG, B-I-G, baby. C-Mac, I love it. Figuring out the puzzle every day. Dan says, I have to trade at work in a room full of people always trying to talk to me about nonsense. Yeah, that pesky job, man. Bernard, how much do you trade on the aspect of feeling and screen time after trading so long? The Nasdaq, I have a feeling for him and his movement, if you know what I mean. Yeah, Bernard, I know what you mean. A lot. I think, you know, there's a mix of robotic and discretionary decision making, and I'm somewhere in the middle, like everyone will end up. And the discretionary aspect, I don't think, can be overlooked. And the only way to get that is to kind of pick a path and then watch the screen. Sit and put in the screen time. So by pick a path, what do I mean? Well, like for me, it always starts, I'm trying to determine, are we in a trend market or a range market? And that goes for the daily chart, like that, right? We start there with the daily. And then we look at intraday. Okay, well, intraday now, are we in more of a trend or are we in more of a range? Right now, we're in more of a range. We're kind of going sideways. So should I be taking big, giant breakout bets here? Probably not. Right, I'm looking more for channel scalps, maybe little continuation scalps inside of the range. But the probability of taking a big breakout bet when we've just been getting rejected breakouts all day is not great. So the name of the game, the most important word in trading, is context. So it's a lot of feel, but it's more than feel. It's a mix of robotic execution and discretionary decision making. Benjamin says, I'm at 121 trades this week with a 59% win rate. Ben, is that 1-to-1 reward to risk? That's part of the equation that we got to know. But I'm not scaling until I see profits for weeks. I need to prove it to myself before I chase the high, potentially changing careers. Yeah. Yeah, you got to show, you know, listen, even months of finding consistency, it's going to be nothing. Once you finally quit, you're going to be happy you have that proof of concept under your belt. And by the way, the longer you, at some point, it's like, well, we only live so long, it's time to quit and be a trader, right? But the longer you hold off on completely changing careers, that is, the more confidence you'll have, because you'll have seen more market environments. Because the worst thing that can happen is you're making money, you quit your job, and 2 weeks later, the market shifts from a trend market back to a range market. And it's like, oh shit, I don't know how to make money in a range market. And then it's a range market for 12 weeks. That's not a great situation. So ideally, you'd have seen at least a trend market and a range market, maybe a couple of each. And you were able to perform relatively consistently through both. Once you can do that, the confidence will be there. All right, guys. Well, listen, take Profit Trader. If you're looking for daily payouts, that's going to be your best bet, 30% off. If you use code BIG, there's no activation fee. Saves you well over $100 once you pass the test. If you use the code, you pay nothing once you pass. It just activates, you're good to go, and you avoid the activation fee entirely, which is a big, big deal. But Apex right now is the headline. This ends in like 11 hours. 90% off. You can pass in 1 day. Use code BIG, baby, B-I-G. All right, guys. I am likely to trade this afternoon. Currently sitting up, I don't know, like maybe like a quarter of an R in the green. Like $700 in the green. So I would call that, you know, closer to flat, but it is technically green. So because I'd say that's technically red if I was $700 in the red, but either way, it's basically essentially flat as far as R is concerned. So anyway, all that being said, I'm going to continue with a scalping mentality unless something changes here through the afternoon. Remember, guys, hey, Trump is signing executive orders at 1 o'clock Central, and at the same time, 1 Central, we get the FOMC meeting minutes. Pay attention, but that's not going to cause too much volatility any longer than I'd say maybe 15 minutes. It's not 2022. You know, there's really the inflation story has died down a little bit, but it's still important. So maybe 15 minutes of volatility. But really, I'm looking at the executive orders being signed by Trump at 1 o'clock once FOMC kind of passes. All right, guys. Hey, listen, I'll see you tomorrow morning, 8:15 a.m. Central Time. Subscribe to the channel if you have not done so already. On the way out, leave a like on the stream so it pops up for you tomorrow morning. Makes your life easy. All right, guys. Stay patient. Let it come to you and hit it hard when it's time.